Hey man, pull up a chair, kill the noise, and lock the door for the next hour because what I'm about to lay on you isn't another 3 secrets to 10x your account clickbait. This is the raw, unfiltered autopsy of why 9 out of 10 traders vanish before the market ever gives them a real shot, and more importantly, why the one who stays ends up running the table. I'm Dr. Jordan Hale, behavioral psychologist, former prop desk risk coach, and the guy who sat across from grown men making 8 figures a year while they cried over a $3,000 red day. I've seen the dopamine loops, the ego traps, and the exact moment the brain flips from "I'm built for this" to "I'm out." And I'm here to walk you through every inch of that battlefield so you don't become another ghost in the trading forums. Visualize this. Monday morning. The Discord is popping. Newbie after newbie dropping green screen shots, flexing Rolexes they don't own yet, preaching financial freedom in 90 days. You've seen the reel, hell, maybe you posted it. Fast forward 90 days. Silence. The avatar goes dark, the handle changes to something generic, the dream dies without a eulogy. Happens so often it's practically a rite of passage. But here's the gut punch the gurus won't sell you. The market didn't eat them. The market doesn't eat anyone. It simply holds up a mirror, and most guys can't stand the reflection long enough to fix what's broken. Let's start where the fracture always begins, inside the skull. You open a demo account. Every click is magic. Buy button, green candle. Sell button, red candle. Dopamine floods the nucleus accumbens like you just hit the slot jackpot in Vegas. Neurochemically, your brain tags trading as easy reward. Then you go live with real money. First trade, $47 profit, high-five yourself in the mirror. Second trade, 112s, you're already pricing Teslas in your head. Third trade, stop-loss triggered, $180. Heart rate spikes, palms sweat, amygdala lights up like a fire alarm. That's the exact moment the fantasy collides with reality, and 97% of men blink. I want you to meet Musa. 22, works the night shift at a warehouse, parents still scraping rent. One swipe on Instagram and bam, some kid in Dubai flexing a Lambo key next to a P&L showing $1,000 in a day. Musa doesn't know support from resistance, doesn't know a tick from a pip, but he knows one thing. If that stranger can do it, so can he. Downloads MetaTrader on his cracked Android, scrapes together $50, lunch money for the next 2 weeks, and wires it in. First week, beginner's luck smiles. Account doubles to $100. He's shaking, grinning, texting his boys, "Told y'all I'm different." Dreams escalate fast. $500. $5,000, condo downtown, mom never works again. Then the market inhales. A perfect long setup flips. Instead of cutting, Musa adds, lot size doubles. 2 hours later, account zeroed. Stomach drops, face burns, shame floods in. But the dopamine loop is vicious. It doesn't let go easy. He wires another $50. Same script, different day. 3 weeks in, every dime he saved since 16 is smoke. Musa slams the laptop shut, mutters, "Trading's a scam," and vanishes. Sound familiar? It should. That's the default script for damn near every man who ever clicked new order. Breathe with me for a second. Inhale 4 counts, hold 4, exhale 6. Good. Because Musa's story isn't unique. It's the baseline operating system of the male brain under financial uncertainty. Harvard Business Review ran a longitudinal study on 1,800 retail traders. 18 months in, 91% were either break-even or blown. The 9% still standing, average time to first consistent green month, 26 months. Let that sink in. Over 2 years of red before the curve bends, yet the average quitting point, 4.7 months. Men walk away literally inches from the inflection point. Why? Because the brain is wired to avoid pain, not to compound it into mastery. Close your eyes and picture a gold miner in 1849. Swings the pickaxe, dust flies, arms ache, nothing. Hours turn to days, blisters split, doubt screams, turn back. Most drop the tool right there. What they never see is the vein of gold 3 swings deeper. Trading is that mine. Consistency isn't month 3, it's month 30. Mastery isn't year 1, it's year 5. But the male ego wants the Lambo before the calluses form. And when the market refuses to comply, the ego files for divorce. Let me hit you with the neuroscience. Every loss triggers the anterior cingulate cortex, same region activated when you touch a hot stove. Evolution trained you to pull your hand away. Trading demands the opposite. Keep the hand on the stove, study the burn, adjust grip. That's counterinstinctual. Stanford ran fMRI scans on 120-day traders. The ones who lasted 5 years showed 42% thicker prefrontal cortex volume, literally rewired for delayed gratification. The quitters? Thinner cortex, higher amygdala reactivity. Translation: your brain can be trained to endure, but only if you stay in the chair long enough for neuroplasticity to kick in. Now I want you to reflect, yes, right now. Pull up your last 10 trades. Look at the column marked P&L. Red, green, doesn't matter. Ask yourself one question. What did this trade teach me about me? Not the chart, you. Because the market is a mirror, brother. It doesn't show you support levels. It shows you impulse control. It doesn't reveal Fibonacci. It reveals fear of missing out. Every candlestick is a Rorschach test for your psyche, and most men fail the ink blot because they're too busy chasing the next green candle to read their own reflection. Let's talk expectations. The silent killer dressed as motivation. You walk in thinking trading is a vending machine. Insert strategy, dispense cash. Reality, it's a dojo. You don't earn a black belt in 6 months. You earn it after 10,000 reps of getting punched in the face. Duke University tracked 10,000 aspiring professionals across medicine, law, and finance. Average time to proficiency, 10,400 hours. Trading sits at the high end, 12,000 hours, because you're fighting 2 opponents, the market and your own mirror neurons. Yet guys show up expecting consistent profits by hour 300. When the account draws down 15%, they don't see tuition. They see failure. And failure to the male brain is castration. Control this. Every time you feel the urge to add to a loser, pause. Place your hand on your chest. Feel the heartbeat. That thump-thump is your primitive brain screaming danger. Override it. Say out loud, this is data, not death. Repetition rewires. Do it 50 times, the urge shrinks. Do it 500, it vanishes. I had a client, 41, ex-Marine, built like a tank, who couldn't stop revenge trading. We installed a physical anchor. Every time he felt the itch, he had to do 20 push-ups before touching the mouse. 3 months later, push-ups dropped to 2, then 0. The anchor became internal. Discipline is a muscle, gentlemen. Flex it or lose it. Here's the cruel irony no one screenshots. The valley of despair is the admission ticket to the plateau of profit. Yale School of Management mapped 4,200 trader journals. The emotional low point, maximum drawdown, maximum self-doubt, occurred on average 11 weeks before the first 3-month positive expectancy streak. 11 weeks. Less than 3 months of pure hell separates the corpses from the compounders. But because the pain feels permanent, the brain rationalizes exit. This isn't for me. I'm not cut out. Lies dressed as mercy. Picture 2 versions of you sitting at the same desk, same chart, same $500 loss. Version A slams the laptop. I suck. Game over. Version B leans in. Entry timing off. Position size greedy. Emotion in driver's seat. Same data, opposite destiny. The delta is mindset, and mindset is trainable. Start tonight. After every session, write 3 lines. 1. What the market did. 2. What I did. 3. What I'm changing tomorrow. 10 weeks of that journal and your prefrontal cortex starts lighting up like a Christmas tree on the fMRI. I've seen it. Let's peel another layer. Ego. Men don't quit trading. Egos do. You've closed million-dollar deals, built companies, commanded respect. Then a 22-year-old kid on YouTube calls a top and you miss it. The identity fracture is seismic. If I can't be right here, who am I? So the ego doubles down, revenge trades, blows the account, then quits to protect the story. Markets are rigged. Truth? Markets don't know your net worth. They don't care about your TED Talk. They reward probability executed without attachment. Humble the ego or the ego humbles you. Breathe again. In 4, hold 4, out 6. Feel the shoulders drop. Good. Now hear this. Every legendary trader you idolize has a graveyard of blown accounts. Paul Tudor Jones lost 66% in 1987 before the crash that made him a billionaire. Ed Seykota turned $5,000 into $15 million, but not before wiping out 3 times. They didn't quit because they separated identity from outcome. The trade isn't you. The drawdown isn't your worth. It's data. Treat it like a scientist, not a gladiator. Social media is the accelerant. You scroll, see some kid post a $27,000 day trade. Dopamine spike. Comparison cortisol. Within minutes, you're chasing setups that don't exist in your plan. MIT ran an experiment. Traders exposed to curated social media wins increased position size by 37% and blew margin calls 400% faster. The fix? Digital minimalism. 1 feed, 1 mentor, 1 journal. Mute the noise, or the noise mutes you. Impatience is the next assassin, and it wears the mask of masculinity. You're a doer, a builder, a closer. Sitting still feels like surrender. So when the account flatlines for a month, the male brain screams, action! You overtrade, chase, force entries that violate every rule you swore to uphold. A 2022 study out of Cambridge tracked 2,100 retail accounts. The cohort that traded more than 12 times per week had a 79% blow-up rate within 90 days. The cohort that traded 4 or fewer high-conviction setups. 64% were still alive and green after 2 years. Less is more, but less feels like weakness until you reframe it as precision. Financial pressure is the hidden landmine. You're not trading with risk capital. You're trading with the mortgage, the kid's tuition, the image you've sold your wife about being the provider. Every tick down is a punch to the solar plexus. I've watched 6-figure executives freeze on a $400 risk because the money was tied to real-world consequences. Rule 1. I drill into every private client. Trade only what you can afford to light on fire while smiling. If losing it ruins your sleep, it's not risk capital, it's ransom. Separate the war chest from the life chest, or the market will hold your family hostage. Isolation is the slow bleed you don't notice until you're dizzy. Trading is the loneliest high-stakes game on earth. No teammates, no coach on the sideline, no water boy. Just you, the screen, and the echo chamber of your own doubts. A meta-analysis in the Journal of Behavioral Finance found that traders with 0 peer accountability quit at 3.2x the rate of those in a mastermind or mentorship. The brain needs external calibration. Without it, every loss feels unique. Every mistake feels terminal. Find your platoon, gentlemen. 1 text thread with 2 other serious traders who journal daily can cut your quitting probability in half. Failure misinterpretation is the final nail. You lose $500 and the brain files it under proof I'm incapable instead of tuition for a PhD in probability. Reframe it tonight. Open a new note on your phone titled Trading Tuition. Every red trade gets a line item, date, loss amount, lesson. Watch the list grow. By trade 200, you'll have a custom curriculum no course can sell you. The most profitable trader I ever coached, 8-figure net worth, still keeps his first blown account statement framed above his desk. Caption, paid in full. Overconfidence is the doppelganger of fear. You string 3 green days, serotonin floods, and suddenly you're the wolf of whatever street you live on. Risk per trade jumps from 1% to 5%. One gap against you and the account hemorrhages. The National Bureau of Economic Research found that traders who increased position size after a winning streak had a 400% higher chance of a catastrophic drawdown within 30 days. The antidote? A mechanical rule. After any 3-trade win streak, cut risk per trade in half for the next 5 setups. Force the brain to earn back its arrogance. Identity attachment is the deepest cut. You are not your P&L. You are not your win rate. You are not the balance in your brokerage. Yet every red day whispers, "You're a fraud." That whisper becomes a roar. And quitting feels like the only way to silence it. Detach. Start every morning with a 60-second ritual. Stand up, feet planted, hands on hips, Superman pose. Say out loud, "I am the operator." The account is the tool. The tool does not define the man. Sounds corny until you've done it for 90 days and the voice in your head finally shuts up. The lure of easy alternatives is the siren song. Your buddy launches a pressure washing business, clears $20K in month 1. You see the Instagram story and the trading screen suddenly feels like a prison. Delayed gratification is the rarest currency in modern masculinity. But compounding only works if you stay in the chair. A side hustle can pay the bills. Trading compounds the legacy. Choose the timeline, not the highlight reel. Process over outcome is the mantra the 1% live by. Obsess over execution, not extraction. Did you wait for the A+ setup? Did you size according to the plan? Did you cut the loser at the predefined stop? 3 yeses and the result is irrelevant. The market owes you nothing, but probability owes you everything if you stack enough clean reps. I want you to build a checklist, laminate it, tape it to your monitor. Every trade must check every box or it doesn't exist. The first 100 trades with the checklist will feel like handcuffs. The next 1,000 will feel like wings. The market is a mirror, not a slot machine. It reflects patience when you wait for the setup. It reflects greed when you add to losers. It reflects fear when you hesitate on winners. It reflects discipline when you log off at 11:30 a.m. with 1 trade taken. Stare into that mirror long enough, and you'll see the man you're becoming, not the money you're chasing. And that man is the only asset that compounds forever. Let's talk about the 6th stage, the crucible where legends are forged and dreams are cremated. You've been at it 18 months. Journal is thick. Rules are second nature. Yet the account is still red overall. Drawdown sits at 28%. The wife asks, "When is this going to work?" The group chat is quiet because everyone else quit. Doubt is no longer a whisper. It's a fog. This is the exact moment 93% of the remaining traders pull the plug. Yale's Trader Diary project mapped it precisely. Peak emotional pain at month 19. First sustained equity curve inflection at month 22. 3 months of hell between breakdown and breakthrough. Close your eyes and feel that fog. Let it be heavy. Now open them and write 1 sentence on a post-it. Pain is the curriculum. Stick it on your monitor. Every time the fog rolls in, read it out loud. Pain is not punishment. It's the resistance that builds the muscle. Discomfort is the toll booth on the road to mastery. Pay it gladly. Struggle is the signal, not the verdict. Every great trader you admire stood exactly where you stand now. Jesse Livermore went bankrupt 3 times before his first million. Mark Minervini lost everything in 1987, lived in his car, then compounded 33,000% over the next decade. They didn't have better indicators. They had better narratives. This is the forge. I am the blade. Quitting is a choice, not a necessity. Endurance is a skill, not a gift. You train it the same way you train a back squat. 1 rep heavier than last week. The next time you're down 3R on a trade and the urge to revenge surges, do one thing. Stand up, walk to the kitchen, drink a full glass of water, sit back down. That 45-second delay is a rep. Do it 200 times and the urge atrophies. I've seen grown men cry after their 100th water break because they finally felt the muscle form. The market rewards survivors, not geniuses. It rewards the man who shows up on December 26 when the volume is dead and the family is at the movies. It rewards the man who journals a losing trade on his birthday. It rewards the man who stares at a flat equity curve for 400 days and still executes the next setup like it's his first. Time in the chair is the only variable that cannot be faked. Picture the chair, not the ergonomic mesh throne you paid $800 for. I mean the invisible seat of persistence. Every morning you slide into it, the leather is worn from yesterday's losses, the armrests scarred by the grip of doubt. Most men stand up the moment the cushion gets hot. The 1% lean back, plant their feet, and refuse to move until the market itself blinks. That chair is where fortunes are forged, where dopamine learns to serve instead of rule, where the prefrontal cortex thickens into armor. Stay in it long enough and the market stops being an opponent. It becomes a partner in your evolution. Let's dissect the neuroscience of endurance. Every time you execute a trade according to plan, win or lose, your brain releases a microdose of BDNF, brain-derived neurotrophic factor. Think of it as miracle grow for your neurons. A 2023 study in Nature Neuroscience followed 68 traders for 36 months. The ones who journaled post-trade, win or lose, showed 28% higher BDNF levels and 41% lower cortisol reactivity during live sessions. Translation: the simple act of reflecting rewires you for calm under fire. Start tonight. After your last chart closes, open a voice memo on your phone. 60 seconds. Speak the setup, the execution, the emotion. No filter. Listen back tomorrow morning before coffee. Do it for 30 days, and you'll hear your own voice shift from frantic to surgical. Now, let's talk uncertainty. The ocean every trader must learn to surf. The male brain craves control. We build companies, negotiate deals, command respect because we can predict outcomes. The market laughs at prediction. It's a probabilistic storm where the only certainty is volatility. A 2021 paper from the University of Chicago Booth School tracked 5,400 traders. The ones who scored highest on tolerance for ambiguity, measured pre-study, had 3.2x higher survival rates after 2 years. The test? Simple. How long can you stare at a chart with no edge and not click buy or sell? Train it. Set a timer for 5 minutes. Open a replay. Watch price dance. Hands off the mouse, breathe, extend to 10 minutes, then 20. You're not waiting for a trade. You're training your nervous system to thrive in the void. The void is where edges hide. Routine is the invisible scaffold. The trader who wings it is the trader who cracks. Build a pre-market ritual harder than bedrock. Mine, 5:30 a.m. gym, 6:30 cold shower, 7 hot review yesterday's journal, 7:15 scan for 3 A+ setups only, 8 EOLAOs meditate 5 minutes on the mantra, process over pounds. Market opens at 9:30. I don't touch a key until 10 house unless my exact setup prints. That hour is sacred. No news, no Twitter, no Slack, just me in the mirror. The routine isn't sexy, but it's the reason my equity curve looks like a staircase instead of a heart attack monitor. Community is the antidote to isolation's poison. You need 2 things, a mirror and a sparring partner. The mirror is a mentor who's already walked the path, someone who can call your bluff when you say, the market's against me. The sparring partner is a peer at your level who journals with the same rigor. Every Friday we swap 3 trades, 1 win, 1 loss, 1 scratch. We dissect without ego. No advice, just questions. What did you feel at entry? Where did the plan break? What's the one tweak for Monday? That 30-minute call is worth more than any $2,000 course. Iron sharpens iron, but only if both blades show up. Compounding isn't just for capital, it's for character. Every disciplined trade is a neuron laid. Every journal entry is a synapse strengthened. Every time you cut a loser at the exact stop, you deposit a grain of resilience. After 500 grains, you have a pebble. After 5,000, a boulder. The quitters never see the boulder because they cash out at the pebble stage. A client of mine, former Navy SEAL, 48 years old, kept a literal jar on his desk. Every clean trade, he dropped a marble. Red jar for losses honored, green for winners banked. 18 months later, the jar was full. He poured it out, counted 237 marbles, framed the photo. Caption, "My real account. That jar is now his screensaver." Every red day he taps the glass. The marbles don't lie. Fear and greed are two sides of the same dopamine coin. Fear shrinks your time horizon to the next tick. Greed stretches it to infinity. Both distort probability. The fix is a decision ledger. Before every trade, write 3 lines on a physical post-it. 1. Defined risk. 2. Defined target. 3. Reason I'd be wrong. Stick it to the monitor. If the trade violates any line, it doesn't exist. I had a client who laminated his ledger. Every morning, he'd slap a fresh post-it on top. The old ones went into a folder. 6 months later, he had 180 post-its. 0 rule breaks. His win rate didn't change. His risk-adjusted return tripled. The ledger forced his brain to argue with ink, not impulse. Self-sabotage wears 1,000 masks. I'll start fresh Monday. 1 more trade to get even. I need a break. These are coping mechanisms dressed as strategy. Catch them in real time. Install a browser extension that pops up every time you open the platform. Is this the plan? 1 click yes, 1 click no. Click no and the platform locks for 30 minutes. Sounds extreme until you realize the average blown account takes 43 minutes of consecutive irrational clicks. 30 minutes of forced pause is cheaper than a margin call. Cognitive distortion is the mind's funhouse mirror. You lose 3 trades and suddenly, I always lose. You win 3 and I've cracked the code. Both are lies. Keep a truth ledger. Every distortion gets written down and countered with evidence. Example, I always blow accounts. Counter. Account 1 lasted 41 days, account 2 lasted 68 days. Trend is improvement. Read the ledger every morning. After 60 days, the distortions sound like a bad comedian. Still loud, but no longer believable. The breakthrough is never dramatic. It's a Tuesday in month 27 when you realize you took a 2-hour loss, shrugged, journaled it, and went for a walk without checking the chart again. That shrug is the compound interest of 1,000 reps. The equity curve doesn't skyrocket. It just stops bleeding on red days. Then green days outnumber red by 52% to 48%. Then 55 to 45. Then 1 month you're up 4% with a max drawdown of 1.2%. You don't celebrate with champagne. You celebrate with sleep. Because for the first time in years, the market didn't own your nervous system. The final stage is quiet. No fanfare, no Lambo revving in the driveway. Just a man in his 50s, salt and pepper beard, sitting at the same desk he's occupied since the first blow-up, watching the same pair he's traded for 4 years print a textbook setup. He waits. Price pulls back to the 61.8, volume contracts, the 9 EMA kisses the 21. He enters. Risk 0.7% of the account. Target 2.4R. Stop printed, not mental. He sets the alert, closes the platform, and walks the dog. That walk is the dividend of endurance. The market no longer rents space in his skull. You want that walk. You want the shrug. You want the sleep. But the path is paved with the bones of men who looked exactly like you. Same ambition, same testosterone, same hunger, and quit at the threshold. The difference isn't intelligence. It isn't capital. It isn't even luck. It's the learned ability to treat discomfort as data, doubt as a drill sergeant, and time as an ally instead of an enemy. Let me paint the portrait of the survivor. He wakes at 5:15 without an alarm. Cold shower, black coffee. Reviews yesterday's ledger in 90 seconds. Scans 3 pairs. Finds 1 edge. Waits. Executes. Journals. Gym. Family dinner. Bed by 10. No TikTok. No CNBC, no what if. His equity curve over the last 36 months looks like a gentle uphill trail. 3.2% average monthly, 1.1% max drawdown. Not sexy, but at 1.5% risk per trade, that's a 42% annualized return with the volatility of a bond fund. He doesn't post screenshots. He doesn't need to. The walk with the dog is the flex. Now contrast that with the man who almost made it. Month 23. Drawdown 31%. Wife's side eye at the dinner table. Group chat dead. One more red day and the narrative flips. I've wasted 2 years. He pulls the plug, transfers the remaining $400 to a high-yield savings account, and tells himself he's being responsible. 2 months later, he sees his old setup print for 7R. The regret is physical. Chest tight, jaw clenched. He never touches the platform again. The market didn't beat him. His timeline did. Here's the universal truth, brother. Trading is life with the volume turned up. The same psychology that blows your account is the same psychology that blows your marriage, your health, your legacy. Master one, you master all. The discipline to wait for the A+ setup is the discipline to wait for the right partner. The ability to cut a loser at the stop is the ability to cut a toxic client. The patience to compound at 3% a month is the patience to compound muscle, relationships, wisdom. This isn't about the money. The money is the scorecard. The game is self-mastery. So here's your assignment. Tonight, before your head hits the pillow, take a single index card. Write in bold Sharpie, I commit to 100 clean trades. No exceptions. No excuses. Sign it, date it, tape it above your monitor. Trade number 1 starts tomorrow. Doesn't matter if it's a $10 risk or a $1,000 risk. Clean means predefined entry, predefined stop, predefined target, journaled within 5 minutes of exit. 100, not 99. When you hit 100, send me the card. I'll send you a coin stamped with the Latin per aspera ad astra, through hardship to the stars. I've mailed 312 coins. Every recipient is still trading. Every one. And while you're stacking those 100, build the shield. Every Sunday night, 30 minutes, no phone. Answer 3 questions in writing. What did the market teach me about probability this week? 2. What did it teach me about my impulses? 3. What is the one micro adjustment for next week? File the answers. In 6 months, you'll have a 26-page PhD thesis on yourself. In 2 years, a library. The market is asking you one question, every tick, every candle, every drawdown. Do you want the idea of success or the man it forges? Most answer with their feet, out the door chasing the next shiny object. The few who answer with their ass, glued to the chair, discover that consistency isn't a strategy. It's a revelation. It shows up unannounced on a random Wednesday when you realize you haven't checked the P&L mid-trade in 47 days. The numbers still fluctuate, but the man no longer does. I want you to feel that future version of yourself right now. Stand up, roll your shoulders back. Breathe deep into the belly. Exhale slow. Whisper, I am the survivor. Say it 3 times. Feel the resonance in your chest. That resonance is the compound interest of every rep you're about to stack. Final image. It's 5 years from today. You're 47, 52, 59, doesn't matter. You're on the porch. Grandkids chasing fireflies. Your phone buzzes, monthly statement. You don't even open it. You already know the walk is paid for, the legacy is funded, the man is forged. The market tried to break you. You let it shape you instead. That is the quiet victory no screenshot can capture. So don't quit too soon. The pain you feel tonight is tuition. The doubt is the drill. The grind is the gift. Stay in the chair. Stack the reps. Build the shield. The market doesn't reward the smartest. It doesn't reward the luckiest. It rewards the man who refuses to leave the forge. Now, real talk. I'm building a private Discord for exactly 200 men who are done with the lone wolf bullshit. No courses, no upsells, just real-time chart breakdowns, Monday mindset calls, Friday trade autopsy, and a brotherhood that calls you out when you're slipping and celebrates when you're stacking. It's $47 a month, less than one blown trade. I'm capping it at 200 because I read every journal, answer every DM, and spar with every member. If you're ready to stop bleeding alone and start compounding with a platoon, drop Forge in the comments. I'll DM you the link. First 200 only. No second cohort. Gentlemen, the market is open. The chair is waiting. The Forge is hot. Will you sit? Will you stay? Will you become the man the pain is trying to reveal? Breathe, commit, execute, repeat. See you on the other side of 100 clean trades.